As we begin the new year, everyone is wondering what to expect given that interest rates are set to go up. Will home prices continue to be red hot? Will affordability continue to be challenging, especially for those first-time home buyers? I'll answer these questions along with the age-old question, is now a good time to buy? So hold tight because today we'll be reviewing my 2022 market predictions. Hey House Stackers, welcome to episode 33 of the Stacking Houses podcast, where we're helping working professionals create a solid plan B, a side hustle of passive streams of income through real estate investing. I'm your host, Damon Santa Maria, and my goal for each show is to provide you with some practical and inspiring information so that you too can create a solid financial plan for yourself. So to help you on your journey, I want to give you a free copy of my book entitled How to Acquire Your First 10 Investment Properties. This book is my personal journey, starting from me being broken in debt to creating a multi-million-dollar business. And all you have to do is go to stackinghouses.com/book. And while you're there, you can check out our blog as well as a great webinar training where I outline the step-by-step process that I took in order to get started in real estate. So as I mentioned in the intro, we're coming off of a red hot year where home prices have soared 18% year over year, according to CoreLogic's Home Price Index. And it looks like 2022 is predicted to shatter the record for residential home transactions totaling over $2 trillion. This run-up in many parts of the U.S. has caused the affordability to extend further out of reach for many first-time home buyers, including millennials. And we've discussed this on prior podcast episodes, and it's what I'd like to call the pandemic effect of the last 2 years, characterized by a few different factors, including, number one, people are working from home and trying to avoid spreading the virus. And today, we have the technology and the bandwidth to accomplish the same amount of work, and in many cases, more work, since you never truly leave your job when you work from home. And now you have less of a commute as well. And number two, the working middle class has higher savings rate and now has more equity in their homes, allowing them to trade up to larger homes with bigger yards. And the logic here is that if I'm going to have to, be confined to my primary residence, which now serves as my office and possibly, my kid's classroom, I'm going to need more space, right? Nothing new here. We've seen this transformation over the last 2 years. Now, you would think that if all of these people are trading up to larger properties, it would open the door for the next generation of first-time home buyers, millennials, and even the Gen Z population to acquire those first smaller properties, right? Not so fast. You see, many times those first properties will be retained by the original owners and they'll convert them to rental properties. And the properties that do hit the market are being snapped up by investors left and right. What makes it even more problematic for first-time home buyers is that the builder inventory is almost non-existent because builders are focused on making larger, more profitable homes versus starter homes at a lower margin. So as we head into 2022 with a shortage of more than 5 million homes on the market, this tells me that from my Econ 101 days, the prediction for 2022 is that we're going to continue to see less inventory of smaller entry-level properties. And because there will be less supply, buyers in this category will need to be ready to make more attractive offers and be more flexible when negotiating with sellers. And if you're going to, if you're walking into this market as a real estate investor, you're going to need to look at a lot more properties. You're going to need to find off-market deals, and you're probably going to need to adjust your profitability expectations if the purchase price is higher. Okay, so let's shift gears, and now let's discuss interest rates and inflation. And in full disclosure, I'm no economist, But I do understand the relationship of how the Fed and central banks try to change interest rates in order to achieve certain economic targets, in this case, inflation. And according to the Bureau of Labor Statistics, the inflation rate for November 2021 increased almost 7%, which is the largest increase in 40 years. This means that our buying power just lost 7% of its value. And so this is the silent killer of cash value. So if you have money sitting in a bank earning close to 0%, you're basically losing money every day that inflation ticks up. So as you know, many of you heard the headline news, which is the Fed is projected to raise rates at least 3 times in 2022 and even more in the following years in response to improving economic conditions. So if a 30-year fixed rate mortgage is, let's say, 3% today, it may be closer to 3.75% this time next year. And just so we're clear on this, this is not a 0.75% increase from 3% to 3.75%. It's a 125% increase, which equates to about $100 more per month for the median home price here in the U.S. So there are a few things that we as investors can do. And the first is get rid of cash. As you know, cash is trash, and if you have large amounts sitting around, it's time to put it to work. It's time to buy that first, that second, that third investment property, or invest it into a low-cost index fund tied to the S&P 500. But no matter what you do, invest it wisely. And this also goes for what I call dead equity in any properties that you currently own. And this is the equity that you currently have sitting over and above what's required by your lender or by your state. And here in Texas, we have an 80% loan to value, LTV, which means that we need to keep at least 20% equity in our primary property. But why not, do a cash out refinance, put all that extra money out, and go shopping for your next investment property. And I've done this 6 times, and each time I've bought a new rental property with each new transactions, and it's one of the best ways to grow your portfolio. And time is running out on locking in on these historic low rates, so the time to act is right now. So my prediction, which isn't really much of a prediction since Jerome Powell, Fed chair, has already said we're going to see interest rates steadily rise a few more times, maybe 3 times here in 2022. And aside from dramatic worsening economic conditions, we're also likely to see more rate hikes in 2023 and beyond. So with this information of lower supply, greater demand, higher home prices, and higher interest rates, is now a good time to buy? Well, we need to compare it to what and when, right? So when my parents bought the house that I was raised in 1980, they locked in at an 18% interest rate, a fixed rate of 18%. And, every time interest rates dropped, they would refinance out and drop that to a lower rate. But compared to the 2.5% rate on my current property, was it a good time to buy back then? Probably not compared to today. But if we look at, let's say, 2013, when I first got started in real estate investing, the mortgage rates were at all-time historic lows. There was plenty of inventory to choose from, and the home prices were still pretty deflated from the Great Recession. And so for me, this was probably the best opportunity in my lifetime that I could have bought. And if I could go back and acquire 100 more single-family homes, I would, but I can't. I have to simply live with the current economic conditions of today, and I might need to simply adjust my financial expectations to accommodate for today's landscape. So am I going to get that 1% rent-to-value ratio today? Probably not. Am I going to get that 10% cap rate or 10% cash-on-cash return? Most likely not. But it doesn't mean that all the deals are bad and I have to wait for conditions to improve. It simply means that I need to be a little bit more selective. I might need to look at a few more deals. What was an easy layup before has turned into a free throw shot. But it's certainly not a three-pointer or a half-court shot today. But if we wait too long, the market can get more challenging. So, the great thing about real estate is that, the market is incredibly fragmented with millions of buyers and sellers. There are an estimated 100 million single-family homes in the U.S., and all you need is a few to get started. All you need is a few more to be able to quit your day job, and all you need is a few more to become financially independent. So my last prediction is for you, the listener, and I predict that those of you that get really focused here in the new year, those of you that become a student of the game and invest in yourself and your education, you will find greater satisfaction. I predict that, after you buy that first deal and you begin to cash flow, you'll get bit by that bug, the real estate bug, as I like to call it, and you're going to begin saving for your next deal. And I predict that all of you that continue listening to some of the tips and tricks that I teach here on the podcast, and certainly inside of Stacking Houses Academy, you will become financially independent. So I hope that this has been helpful, and I'd also be happy to answer any questions that you have. So, what are your goals and how can I help accomplish them? I'd love to hear from you. Feel free to hit me up at damon@stackinghouses.com. And hopefully, if you're seriously considering investing in yourself and becoming a professional, I highly encourage you to sign up for Stacking Houses Academy, where you're going to learn the step-by-step process that Jim and I each took to grow our multi-million-dollar real estate businesses. And here's the best part. We've decided to extend our holiday sale where you can get Stacking Houses Academy for 50% off the retail price of $997, which today is only $497. And Jim and I, we really want you to go into the new year ready to make a real impact on your portfolio, your cash flow, and your net worth. So feel free to check that out, stackinghouses.com. And if you liked what you heard today, I would appreciate a like, a share, or a review on the platform that you're listening on, because it really does help some of us little guys that are just getting started on our podcasting journey. And it also helps other house stackers find our great content as well. And as I mentioned at the beginning of the show, I want to give you a free copy of my book entitled How to Acquire Your First 10 Investment Properties. All you have to do is go to stackinghouses.com/book, and you can download it for free. This book is a personal journey from literally being broke to creating a multi-million-dollar real estate business. So check that out at stackinghouses.com. And until next time, happy investing, my friends.